G'day viewers, Tom Lay from Oxygen Home Loans. Today I thought I'd give you my thoughts on the release of the Royal Commission report. Now, as most of you would know, the report was released on Monday afternoon. Now, in it, Kenneth Hayne, who is the Commissioner of the Royal Commission, made some fairly scathing commentary regarding mortgage brokers, and he recommended the abolishment of all trail commissions plus upfront commissions. Now, basically what he's recommended in exchange for those is a fee for service. Now, the idea behind it is he's removing perceived conflicts of interest. Now, from where we sit as a broker, I don't act in anyone's interest except my clients, because if I don't look after my client, they don't come back to me, I don't have a business. So looking after my clients is first and foremost in my thoughts, as it would be for most other mortgage brokers in the country. Now, removing of the perceived conflict of interest. Basically what Hayne said was commissions, both trail and upfront, lead to conflicts of interest in that we would position a client with a lender that offers more commission than another lender, and that may not necessarily be in the favour of the client. That unfortunately is far from the truth. Most of the time what we would do is place a client with a lender that will approve the loan and offer them the best suite or product package, maximising the best rate we can get for that particular client, because remembering that the best rate that's available in the marketplace may not get you an approval. So having the loan with the best rate may not necessarily always be the best solution for a client. None of those sorts of things seem to have entered into his mind when he was coming to these conclusions. Now, anyway, back to the point. So his recommendation is that we move to a fee for service. Now, what is exactly the fee for service? It means that you as the consumer will be paying to access a mortgage. Now, part of his recommendation was that not just will mortgage brokers be charging a fee for service, it will also be applied to the banks to create competition and level the playing field. So what it means for you as a consumer is that you will be subject to a fee that you currently do not pay. Essentially, commissions that are paid to us now come out of bank profit. They do not come out of the borrower's pocket. It is not a fee that gets added to your loan amount. There is no increase in the current interest rate that you get versus or from taking a loan out through me as a broker or any other broker versus what you would get at a lender direct. More often than not, because we're dealing with lenders on a regular basis and providing business to them, we know what lenders are going to offer as a better rate. We can more often than not negotiate with a particular lender to get a better rate than you could if you went through a branch. It's not always the case, but more often than not, we can negotiate better than you could yourselves. Now, the fee for service model. Kenneth Hayne has suggested that we adopt a model that was like the Netherlands. Now, in the Netherlands, I think they charge something like €2,100 for a mortgage. Now, that equates to about $3,000 Australian. Now, it doesn't matter whether you're borrowing $100,000 or $1 million, you pay a $3,000 fee. So who does that benefit? The wealthy. Who does it disadvantage? Those that are at the lower end of the socio-economic scale. Now, essentially, those with lower size mortgages, and particularly first home buyers, if you have a 10% deposit and you're trying to buy your first property, the last thing you can afford to do is pay $3,000 to access a mortgage. But that's exactly what they're going to have to do under the proposal. Now, how is that going to work? If you haven't got $3,000 to pay, how are you going to do it? The short answer is it will work the same as lenders' mortgage insurance currently does. If you don't have the cash to pay for it, it will get added to your loan. Now, how is that going to impact a borrower? Well, short answer is the average loan term is 30 years. Now, most borrowers don't have the one mortgage for 30 years. For us as mortgage brokers, the industry average is about a 4-year lifespan. So each loan only lasts 4 years. What that means is that we tend to review and renegotiate or refinance our clients every 4 years. So that means on a 30-year term, we're doing it 7.5 times. Now, if you had to pay 7.5 times $3,000 over the life of your loan, and then you kept adding that to your loan amount, that will equate to quite a considerable amount that you have had to spend. Now, in addition to that, because it's been added to your loan, you are paying the interest on that amount for the life of the loan. How that is a win for a consumer and how that helps a consumer is beyond me. I simply have no clues. The Hayne Royal Commission was a commission into banking misconduct. As we've seen this week, the only ones that we got rewarded out of the release of the Hayne report were the big banks whose stocks soared instantly. The executives that run the banks, the ones that oversaw the misconduct that resulted in consumers suffering losses, failed lifestyles, suicides in some cases, depression, all those sorts of things that the poor people that the Royal Commission was supposed to be about, they are going to be the ones that suffer again. The release of the report has just been simply a win-win for the big banks. So not only do the big banks get to pocket the commissions that they currently pay to us, on which executives will get paid bonuses, they suddenly will be the recipients of this new fee for service to level the playing field. That's a profit centre that they hadn't even thought of. They probably hadn't even dreamt of, but suddenly Commissioner Hayne has given it to them. Now, where does that leave us? As an industry, we're going to be fighting hard and lobbying on behalf of our consumers. Why? Because we fight for our consumers. That's what we do. We're not fighting for ourselves, we're fighting for our consumers. One of the things is it's a fee that they don't currently pay that they're going to have to. So we are not in favour of that. Now, as for me, I'll be able to charge that fee for service because I believe I offer a service that is sufficiently justifiable to entitle myself to that fee. Now, no one deserves to work without earning a living. We all get that. Now, back to where does it leave us? Well, the choices are clear. As a result of the release of the report, the two political sides, given that we have an election coming up in May, have made clear their intentions. The Labor Party has said they will implement every recommendation in the report. That means banning commissions and introducing a fee for service. It's clear cut. They've said it. It's just a matter of when they will be implemented, not if. The Liberal Party, on the other hand, have announced that they will ban trail commissions from the 1st of July 2020. Okay? That's a small term loss. We as brokers can live with that. Now, in terms of the upfronts and the consumer paying the fee for service, that is the big fight, that's the big battle, that's what we are pushing hard for from here on in, and you'll hear a lot of that over the next coming months. Now, meanwhile, the Liberal Party, they have banned the trails as of 1st of July 2020. They have said that they will hold a review into upfront commissions in 3 years' time. The thing that Hayne didn't seem to take into account was that there's a combined industry forum that made recommendations and has implemented the recommendations from the ASIC review into broker remuneration. That was a report done in 2017. They have implemented a number of the changes that ASIC recommended. Now, those things have only just started to take place, so the Liberal Party have at least given the opportunity for those to clear the air before they determine whether or not upfront commissions actually have perceived conflicts of interest and therefore need to go and a fee for service come in, or whether they stay and the status quo remains. So for me, it's pretty clear. The Liberal Party understand, the Labor Party don't. Now, I'm not one for making political statements, but I guess as an industry and for me and my consumers, the key thing is that it will cost every single mortgage holder and every single prospective mortgage holder if Labor get into power in May. Liberals, we've got time to address and action and eliminate those perceived conflicts of interest, and that then can defer the introduction of that fee for service. Those are my thoughts on the Royal Commission and the report. I'm Tom Lay from Oxygen Home Loans. Thanks for watching.